gold. I cover it all the time because I own a lot of gold. And actually, I was looking at when I purchased all my gold, a lot of gold and silver during the last major breakout. And I was actually going to write an article on it and show you each of the dates where I bought it once it confirmed a new super cycle to the upside. So you can see kind of just how I have been accumulating physical. I just buy physical. And so I think it'll be an interesting aspect. And it's starting to get pretty exciting. Gold, I mean, trading up, around the $2,000 mark. It's pretty exciting if it starts to break out here. I'm going to pull up the monthly chart. There could be fireworks. There could be fireworks in either direction. This could have a huge failed reversal and come right back down. A lot of this was driven on news. So it could come right back down and flush down like I've been talking about for a long time. The stock market goes into a stage 4 decline. Maybe it just comes back down to the lower end of the range. Maybe it comes way down. Maybe it holds up and becomes the one core asset and commodity that bucks the trend. It could do much better than gold miners and silver. It is a global currency. That's why it's holding up better than silver. It's doing better than gold miners. This isn't, I look at silver and everybody has their own view. This is just my view. I look at gold miners, silver miners, and silver as the North American speculative trade. Those are people looking to make a lot of money. They want to play the big swings. Whereas gold to me is the global kind of reserve currency in a roundabout way, that when everyone's nervous around the world about their own banks and everything else, their own currencies, they can move to gold. And that's why I think gold is doing well and holding up. Well, everything else is actually far from the highs still when you compare it to gold miners, silver miners. So that's kind of my take on gold. So I cover it. I'm going to start covering it in more detail because it is starting to get exciting. This could be the start of a new major breakout, but I don't give out the gold signals like in CGS. You won't find us, issuing GLD because it doesn't quite work with this particular strategy. It needs its own strategy to focus on and have a portion of your capital focused on a gold trading strategy. So that's the way I see it.
Yeah, I have a few comments on that too, Chris.
Sure.
I've been looking at that chart, and we see about a year ago we had that brief excursion above 2000, and then August of I think 2020 we had the previous peak above 2000, and they didn't last long. If you zoom down on those, it's only like a couple days, and they start to pull back, and then we got a pretty sustained downtrend. So I'm pretty cautious here. We've had a few excursions above 2000 over the last couple of days, but we know this has been a fear-driven kind of safe haven play. And we've got another question about does the gold rally have legs? I think what I need to see is if we're above 2000, it's more than just for a day or two, and maybe higher than about 2080 where we had peaked out before. And I would also like to see a pullback and retest on that at the $2,000 level. So, if we're above 2000 and we start to get a retracement and it comes back down to 2000 and then bounces up, then that would get me a lot more excited about a sustained move above 2000. But from what we've seen in the past, that money can come flying out of gold pretty fast, and you get into a downtrend that could be a pretty sustained downtrend.
Yeah. Yeah. Every time we see it get up here, there's some type of event, and there's like this huge, this one, both of these, there's some type of event that drives it up, and we're having an event right now that is driving
when it's
it
hot,
up.
it's hot. Yeah.
And so that's what I really hate to see actually for gold, because I want gold to just take off. I can't wait for gold to break out and run. The problem is when we get a big move and it is on an event, to me, it's a fake move. It's just a stampede, everybody doing the same thing. There's war, everybody piles into gold. There's a banking crisis and currency crisis, everybody piles into, gold to protect it. So we're in this phase, and this is definitely what you're talking about. It needs to come up here and maybe hold its ground, not just spike up and potentially reverse. So that'll definitely going to be, everybody's waiting to see if gold has legs. It feels like it's kind of starting to become the crowded thought.
Yeah. And if it just takes off and just like a rocket here, way above 2000, heading towards 3000 or something. That's kind of a scary scenario in itself, because if that happens, we've probably got some other bigger problems that we're dealing with. So
For sure. And it's
yeah,
really hard to jump in and chase it. I mean, it's
yeah,
because it's
yeah,
going straight up on news. And the thing is, it's a huge pattern. If it does break out and keep running, it could, 2,600 could be the next stop, which,
yeah,
so it is definitely like you'd have to jump on and just, maybe not get too aggressive, because it could come flying right back down again. But
yeah.
it
I'd,
is a
I'd
bull
much
market.
rather see a
And
gentle trend up. Yeah.
I'd like to see it consolidate, hold some ground, not spike up
Mhm.
on news. But I guess we'll see how it unfolds and see how it goes from here.
Yep.
Chris, do you want to just briefly touch on the gold and oil guy, since we're talking about gold?
Oh, sure. Yeah. So we have, you know what I've got, let me pull this up here. So if you don't know about it, we do have the Gold and Oil Guy newsletter, which if you wanted to get in on that, this is for momentum trading. So every morning we post an ETF report with these ETFs specifically, more or less telling you when this is for swing trading and momentum trading. Some of these trades literally last a day. We can hit a target and it can reverse. Some of them will last several weeks. So this is for short-term active traders who want to try and catch the weekly swings, which we've been able to catch some pretty wild swings over the last couple of weeks, especially in the precious metal space. We even had SPY go short. It came all the way down, hit its first target, I think the same day. But more or less, we cover the VIX, gold miners, GLD, silver miners, silver USO, which is crude, and then the Bitcoin, the BITO ETF. So if you do want more action and you really want to get into the nitty gritty and know where the buy point is, where the first target is, where the stop is, this is from a very high level. This is telling you the trend, the color of the symbols telling you, is it in a bullish trend? Like, is it going up? If it's red, it means we're looking, it's either down or we're in a short position. If it's black, it has a mixed signal. There's not a clear signal. You might want to wait until it turns into a red or a green and then take the position. So this is a way to get in on that action if you're really active and you want to not sit on your hands while these markets are swinging around. Same with futures. We cover the futures markets, show the contracts. Not always will the futures have the same signals as the ETFs. Futures trade around the clock. ETFs only trade like a third of the day. They can have a bit different signals. And sometimes one can be long, one can be short. Both of them can actually hit their targets and get out within a couple of days and both make money, one long, one short. Futures could be long, ETF could be short. It's just the way they're different markets. If you don't trade futures, you don't know much about them, don't even touch them. ETFs is the simple, easy way to do it. You don't have a lot of leverage. So there's this, the goldanoilguy.com. You can check it out if you want to read about it, see how it works, but it's a very simple early pre-market update telling you where the key levels are to get in, get out of precious metals and miners for those who want to be more active and try and catch these swings.